We got the next tranche of monthly inflation data from the ABS today, and it showed that the Consumer Price Index indicator edged down to 2.4%, which is below economists' estimates of 2.5%. The headline figure has been inside the RBA's 2 to 3% band now for 7 straight months. One important point of distinction with the monthly indicator is that while it will include prices for all the items in the CPI basket, not all these prices will be updated each month. So there are large helpings of fudge in the numbers, which is why the RBA tends to value the quarterly data more. That said, even the trimmed measure, which smooths out volatile items such as food and energy, and is the focus of the RBA's attention, did play ball, decelerating to 2.7% in February from 2.8% in the prior month. So what's ahead? Well, of course, we'll get the more complete quarterly data in a month's time, which the RBA is more likely to consider in their rate decision making. But while headline inflation fell to 2.4% last month, it is expected to increase this year as state government energy bill subsidies expire, even though the federal government has extended the support for power bills another 6 months. And as a result, by the way, of this use of taxpayer funds, the ABS recently revised down their weighting given to power bills in their inflation calculation, which just shows you what $9 billion of taxpayer money can do. Actually speaking, following the release of the figures and handing out his fourth budget, Treasurer Jim Chalmers took credit, saying the government's fiscal policy helped break the back of inflation when it was at its peak. That said, he had earlier warned that consumer prices could rise after Cyclone Alfred destroyed crops and homes and caused widespread flooding and property damages and cut power to almost 500,000 residents, as he laid bare the economic costs of that disaster. The prospect of quickening inflation, of course, is a blow to both consumers and the government, which is keen for a cost of living crisis to ease ahead of an election which must be run by May the 17th. The RBA cut the interest rate in February for the first time in 4 years as inflation slowed, but it has said it's going to be cautious about future decisions, which is probably right, given also the rising geopolitical risks and trade barriers, which may present another layer of risk as to how they will feed into prices. Financial market traders don't expect the RBA Governor Michelle Bullock to lower the cash rate from 4.1% to 3.85% until the July board meeting, which is well after the federal election.